Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, Powell's speech. Following last week's rate decision, Fed Chair Powell has a widely anticipated speech scheduled for late this Tuesday at the Economic Club of Washington. So sooner after the meeting, there is a good chance Powell will use the opportunity to clarify what came out of the Fed meeting held a few days earlier. Number 2, RBA rate decision. Another rate hike this week by Australian central bankers is forecast by economists. The central bank has flagged up its fight against inflation as first priority, so likely policymakers will look past the shock Australian retail data that registered its 4th largest ever decline, while snapping a run of 11 consecutive monthly increases. The hawkishness supports the Aussie dollar, which recently broke above the big 0.70 level versus the dollar. Number 3, UK GDP. Now, not for the first time, the IMF have come out all doom and gloom about the British economy, predicting that the UK will be the only major economy to shrink in 2023. The UK is already in a technical recession, with negative growth in Q2 and Q3, while Q4 is expected to clock in at minus 0.2% quarter over quarter. The negativity has reflected in the soft tone for the British pound in recent weeks, except versus a weak US dollar. Number 4, Canada unemployment. Expectations are for a slight uptick in Canadian unemployment in January from a 5% rate registered in December. The less hawkish stance of the Bank of Canada and flat oil prices have seen the US dollar-Canadian dollar pair trade in a range around 1.35 for a number of weeks. Number 5, more earnings. Q4 earnings season will rumble on this week. According to FactSet, with around a third of S&P 500 companies having reported for Q4 2022, 69% of S&P 500 companies have reported a positive EPS surprise. However, beating expectations bellies the weak underlying performance. The expected average earnings decline for the S&P 500 is minus 5%, which would mark the first time the index has reported a year-over-year decline in earnings since Q3 2020. You can of course click on the link in the description just below to see the full economic calendar with the previous month's data and consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and remember to please give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.